Good morning, good afternoon, good evening, no matter where you are in the world. This is Howie, and I'm here to help you win with money. Before we go on, please join me in my group in Investing 102 is where you can read, chat, DM, exchange ideas. Before we get into the meat of this, I wanted to explain why sometimes it's worth it to have a paid professional to help you. Here's a case or a story where if you had someone like a CPA or a registered financial advisor or someone who actually know how taxes work when it comes to trading, this could have been avoided. A lot of times we like to save a nickel or penny just because we think we know better. And then in the end, it costs you more in the long run. And as a financial coach, I see this all the time. They want to hire me at the very end to save them some money, and it doesn't work that way. Sometimes you made the mess, and it's just so hard to get out. So let's go on and explain what we're talking about in today's episode. Here is an article that I wanted to look at. You see this title, it says Robinhood trader may face a $800,000 tax bill. And we don't know why, there's a lot of reasons. So let's get into it by clicking into this link. That brings us to this story. It's released on March 26, 2001, which is only one day ago. It came out yesterday. So this is a new article. And I want to show you something really important in this one. Let's see what happened here. It talks about new people creating a brokerage account. A lot of people are trading. And it tells the story of one Robinhood newbie who has a big tax bill. And basically, this person made a lot of trades, $45 million worth of trades, but the net profit is really $45,000. But then there's a kicker to this. This guy was trading, this is the volume they were doing. Not every day he's traded that much. And it goes on to explain how this can happen. And it goes on to say he opened an account with 30K. He did a lot of trades. He gets this 1099B and he enters all that data into TurboTax. And here's what TurboTax said. $1.4 million in capital gains. And there goes your tax bill. And we're all wondering, how is that possible if he only really netted $45,000 in his account? And this is where the article explains it. There is something called a wash rule. And I'm going to just read the article first so you'll understand it. And it goes on here. You can read this. But you're not supposed to, if you sell something for a loss, you're not supposed to rebuy it back. And there is a regulation that says this. It's the wash rule. And it's not a new thing. I remember it when I used to do my taxes by hand. And so this rule is not new. It's been around. I don't know what year it came out, but I know it's been around way before the dot-com days. And I know it's been around. I'm pretty sure it's been around longer than that. But anyway, it's not new. So anybody who's older or anybody who actually read the tax code, and again, no one sits there reading the tax code. I want you to understand that. But when you're doing your taxes and you're doing this type of event, there are times where you need to read what the rules are so you know how to navigate around it. Or at least understand it. Otherwise, you're just going to trust some dude at H&R Block or whatever it is just to tell you what the rule says. And the problem with doing that is people tell you can itemize anything or whatever it is. People take these weird things and they make their own rules up. And in this case, this guy broke the rule. A lot of his trades were disallowed. So therefore, you can't use one trade to offset the other one. It doesn't work that way. And so it counts as profit. And that's what happens. And the other thing that's interesting in this article is with so many new traders on Robinhood, the rule can pose a problem for novices who trade in and out of the same few stocks. You see that? Their investment may have loss value, but they won't be able to claim the losses in the 1040. And it goes on. You can read this. He's going to have to fight with the IRS. This is not an issue with the brokerage company. This is not something that Robinhood did wrong. And I don't even know if I agree with this. I mean, free comes out of, I mean, that's kind of a misleading title here on this article. Maybe what they can say is Robinhood maybe didn't do a good job in warning people. I know some other brokerage companies may have a little warning by saying if you do this trade, you may trigger a wash rule, and it will stop you from doing the trade unless you hit the button again or something like that. I don't know if Robinhood has that because I don't use Robinhood. So let's get into the actual rule. And again, I'm not going to read it. If you want to read it, you can go here. This is a pretty good explanation. It tells you what happens. You got 30 days before and after. So it's really like a 61-day window. And it goes into the details here, understanding it. Here's what it works. They updated, and there was a little updated to here. It gives you an example. So that explains the whole story. But before I even go on, there's a couple things I want to say as a solution. One is you shouldn't even be using Robinhood. That's the first thing I always tell people. And I even did a video on that. I'm going to search for it here. I talked about the whole payment flow. They're not giving you the best price. And here you go. I updated the search pattern, type in Robinhood, and this is what I found. So I did a couple of videos in the past about Robinhood. Robinhood doesn't have OTC stocks. I couldn't buy some of these things that I wanted, so I didn't like it for that reason. But there's a bigger reason why I don't like Robinhood, and I did it in this video. You'll see that here. Where are the retirement accounts? Okay? That's exactly the way I titled my video. If you were trading in a retirement account, a Roth IRA, or even an IRA, you may not have these issues, especially in a Roth. In a non-taxable account, there is no tax event triggered. And I have mentioned that in the past of why these are the reasons why I don't even like Robinhood. I mean, there are many other reasons, right? This is way before the whole payment for order flow scandal came about with the whole GameStop and AMC stuff. But I have always talked saying, hey, if you know what you're doing, you shouldn't even have Robinhood for your trading account. That just makes no sense. Because if you want to trade, do it without the tax events. You don't have to record all your trades. You don't have to know whether you did 5 trades this week or 1,000 trades this week. No one really cares. Whatever's in your account is in your account. If you do that in a Roth, if you gain money, that's yours to keep. If you lose money, you lost it. It just disappeared. And if you want to confirm it, I did a quick Google search, and you'll see it right here. You see, inside an IRA, no one cares. Watch sales have no meaning because you treat taxable events very different in those type of accounts. So these are the things that I've been teaching. I've been telling you that. But this is what we do as coaches. When we teach, people don't listen. There's really not much I can do. I'm not here to force you, to bend you to my will or bend you to my opinion. These are things that we know as coaches. If you choose not to listen, that's okay. Poor guy, $800,000 tax liability. I'm sure he'll negotiate with the IRS, but he's going to own something. That's just the way it will work. With that being said, comment below. I know not all of you will like this. If you're a young millennial who has a Robinhood account, you may even dislike this video. You may even give me a thumbs down. You know what? I'm not here. I know I'm not going to please everyone. I'm just trying to explain what happened, what your alternatives were, what you could have done differently. People should know the difference of what a taxable brokerage account is. What's the best type of holdings in those? I don't even like putting dividend stocks in my taxable account. I like things with no dividends so it doesn't trigger any event. But again, this is what I do. You can choose not to listen. That's your prerogative. We don't cancel rules, and we don't, again, this is the whole thing about maybe that IRA rules stink, but if you don't know how to follow it, really not much I can say. All I can do is help you win with money. Whether you choose to listen or not my fault. We can still do this together. Maybe you'll listen in the future. I'll help you make $1 at a time. You do it enough times, you'll be a millionaire. Outside of that, hope you have a profitable day. Bye-bye.